Hey, welcome to another update of what's happening in the Wichita housing market. We now have the January statistics for 2023. Let's check it out and see what's happening in Wichita. I'll try to also talk about in comparison to what you hear on the national news, because I know that's from Facebook and all the social media out there, Instagram, TikTok, you tend to hear more of what happens on an overall level, which doesn't exactly correlate to Wichita based on the fact that we're so small. We are not the gigantic cities and what's going on in LA, New York, San Francisco. For San Francisco, I know they're supposed to be negative 15% this year. So I do always want to have you make it very cautionary tale that talk to a local expert. If you have Wichita and surrounding area questions here, give me a holler. But we do not follow exactly what you hear in the typical media. So that's something to keep in the back of your mind. But yeah, let's check. Let me pull it up right now. And here we are. Let's get to here. Okay. I have pulled up. Well, here, let's check this out. So just so you see, when I get this press release notice, these are the counties that we're looking at: Butler, Cowley, Harvey, Sedgwick, Sumner, and then total MLS. So what I tend to pull up is, and I've got two we're going to look at today. I've got the total MLS, which numbers will be a little bit down. And then I've got from the Sedgwick County portion, because the majority of our population is in Sedgwick County. These are all the smaller farm, rural type of areas. And so that's why I try to look at overall MLS and then the Sedgwick. So let's go and just kind of quickly show you an overview. So here is the entire MLS. And then I've got Sedgwick over here. And just to give you a highlight, like here you can see 522 closed listings for January. When you go over to Sedgwick, you'll see 388, because of course that's not the entire MLS. With that said, though, I like to show Sedgwick because the price points are higher. I mean, you look down here, you've got 190,000, and then you look at the entire MLS and it's 185. That's the kind of reasons I like to go over and talk about both of them. So for kicks right now, let's stick on the entire MLS and see what's happened in January. So basically we fell in January. This makes sense because November and December, the buyer stopped. We felt it here. It absolutely stopped. Let me go down to show you these bigger numbers here. So look at the 717 to 522, down 27%. So yeah, that stays in line with the vast majority of the U.S. Everyone was sitting on the sidelines, they're so used to 2s and 3s of the interest rates. So when it hits up to past 7, everyone's like, whoa, let's stop. It's got to come back down. We know inflation was going crazy. So yeah, so we definitely dropped. And then just to check out Sedgwick, I don't have any rhyme or reason on how I'm going to show these to you, but kind of bouncing back and forth kind of shows you a little bit about the full picture. So Sedgwick, yeah, was at the main bulk of our metro, I should say, was 515 and down to 388. So that was a decrease of 24%. So let's head back into the entire MLS. So here's the great news is we've got the increase in listings. So you look at last year, 2022, and we're looking at the current month, as you can see. So we're looking at January. And over here, this quadrant will show you the year to date. And of course, year to date, we're just in January. So hence the NA along the way. But yeah, so this is great news. 661, we're increasing in listings. Hopefully that trend continues. We have too many buyers. We're already going back to multiple offers. And I'm talking about now that we're at the end of January. These stats aren't reflecting that. These stats are reflecting the end of, I guess technically the end of January. But a delayed response of what happened in December and November. So yeah, increase. That's great. Look at that, 63% increase. Wow. And so that shows you we've got more month supply at 1.2. And these are just new listings. We got about 7 more. These are all kind of pending contracts, are pretty far down to stuff that's under contract right now. And that's, again, just probably a reflection of November and December with the halting of it. January has, though, I will admit, has picked up, and since we're looking at January, we've started to see the increase. So, but that's also thinking that January, I started doing multiple offers again. I had, luckily a buyer of mine won one when I didn't think they would, but they did, where I talked to another realtor in that same price range, like about the 400K price range. They went 26K over, did not get it. My people went about 10K over. They did get it. And let's see, sales volume is down. It's down, though it looks like about 32% here. Again, that's just people sitting on the sidelines. Now, here we have average price, but typically in real estate, we look at the median price. So I'm going to kind of stick with this as I do in most of my videos. We don't, it takes out the outliers. Like if you're in a 200K subdivision, there might be $1 million house, which would skew the prices. So this kind of helps not skew it. So we're at 182,000 last year and still increasing, 185,000 this year for the median sale price. And as you can see, we're even longer on the market here at 11 days. These are days on market from 6 days. And really in the summer, I mean, we were seeing just 3 days, 3 days, 3 days. Again, this is median days on market. So this is talking about the average homes, the ranch houses, the ones that, in the 200K range, tend to fall in here. And then, we're still at the 100% of list price. Sales going at list price, not really getting deals. Funny enough, I will say, my clients that went under contract in December, funny enough, a bunch of them went under in December, and they pretty much all got deals. I'm sorry, one of them was a listing, and the buyer on that house got a deal. So everyone was going in under asking for repairs and getting all of it. Just with the complete change in the market at that point. We're looking at it going back to normal, and give us another month and we're going to be back into the complete multiple offers. We already are, but just with the listings that come back and the seasonality it's already begun because we're at February 20th. The day I'm doing this, we're back in the swing of spring season with March just right around the corner. So 100%. So that's kind of just been typical for the last couple years. And let's hear, we're closed listings down 717 to 522. And median price is kind of what we went over. Total sales volume, is going to read here what's in the right-hand section. Fell to 107. I think we already talked about that. And okay, let's go to history of closed listings. Let's go up here a little bit. Actual values are in the blue. The moving average is in the red. So we're pretty far down, as you can see here on the right. Okay, so closed listings by month. This is just, again, going this kind of shows you, we got the blue starting out for January. So we are, as you can see, significantly down. We're at 522 here, and green was 2022. So that was last year, and red was the year before that. So looks like we're just each year has gone down by closed listings. And again, it's just, we need more listings. We need more listings. We need more listings. Let's look over here to the right. But yeah, this gives us there's 2021, 2022, and you can see right now we're starting up to very low closings, but again, that's going off of the interest rate increasing to 7 at the end of the year. This is just kind of fun. It's just the closed listings by price range. I always like to look at the $1 million one. We have one that closed that was over $1 million, and then I like to look at the bulk of it. It's like between 200 and 250. So we got 16% really right in there. And then the next one would be, especially with the appreciation, it's look between 200 to 300. But going under $200,000 for the median price, that was, good to hear for buyers. Okay, let's keep going on. And then here's the average price. Like I said, we typically look at the median price. So I'm just going to kind of scooch past there, going to the median price. And here we are, median price. Look at the blue on the, unlike the closed listings, this is at the top of over the last 2 years, which, again, we know appreciation is kicking in good. Not so bad. It's just a smidge above the green. And let's see. We got red is 2021, 2022. So let's look over here. So so 2021 January, we're at 175, increased to 182, and we're at 185 now. What I did like to see, let me go back here. These are closed listings. So this is stuff that's actually closed. It's not stuff that is still on the market. It's not still pending. That's the difference with this particular chart. And so, yeah, what I was looking at last year is like, look at all, we went over 200, like 2021, 1 month barely squeaked over 200. So last year I'll say, okay, we're past the 200 mark. We're probably not going backwards, but lo and behold, look, we went backwards. In January, February, we know the slower months, but really I still look at the fact that the interest rate going, toward the sevens, and people just going, well, let's wait to see what happens. We'll wait till it comes down a little bit. And even as of today, it looks like it went up last week. So it's sounding like it's going to kind of stay on a little bit on the higher range for maybe the first half of the year. I'll tell you this, it's not going to stop the buyers. They're going to be back out there, the low listings. It's still going to be multiple offers. As I tell most people, buy a house and refinance. We're not LA, we're not where it's unaffordable here. You hold on to a house for 10 years, it appreciates, that type. So yeah, 185 is what the year starting out at. So let's see what else we've got. Average days on market. And again, I go to the median on this one. Looking at 11 days on market. So yeah, last year, all I can remember seeing was threes, just because no listings equals quick sales for the sellers. But it makes it difficult for sellers last year to go out and buy something else. So yeah, 11 days. So it looks like we're even longer on the market. We're going to start, of course, seeing that change. Again, with all I'm showing a ton of buyers out right now looking, and I'm already waiting today, actually right this second, waiting to hear about a multiple offer that we put in over the weekend. And it wasn't going to be decided until today. So great house, cute area. So we'll see. Okay, so we've got active listings. So these are listings that are actually on the market. So this is the great news. Again, 661, January 2022, and we've got over 1,000. Thank goodness. We're increasing. We want to keep seeing this number go up and up and up to make it more of an even market. So buyers and sellers, and it makes it easier. Even if you sell a house, even though you're selling for so much over, if you are wanting to buy, great if you're not, but if you are going to buy, you kind of want this to be a little bit more even so you have a house to move into. So 0.7 to 1.2, that's great to see. And the median active listing price, 225 last year to 285. So those are active listings right now. And again, we're still in the entire MLS. So this includes the smaller counties around us. History of active listings, as you can see, we've been on not a good slope all the way down, which has created the scenario we have today, which is few listings and tons of buyers. So of course, we'll start to hopefully see that keep peaking up and up and up to make it more of a balanced market. Active listings, again, love seeing this, love seeing the blue at the top, meaning we had fewer listings in here we got 2020. Oh, 2022 is down here. 2021 is up here. So yeah, last year it looks like that last year wasn't fun. I mean, it was great for the sellers, don't get me wrong. But buyers, boy, we were writing offers left and right, and so many offers with, buyers having a hard time being able to get the property due to the low listings. But this is showing you that we're starting off great with active listings up in this range. And it looks like it even started about July of last year. Listings started picking up. Here's currently active listings by price range. So million, you got 25 over the $1 million mark. And so the highest one, though, is between 300 and 400,000. So that's where the majority of listings are. And that makes sense. Appreciation's kicked up. I used to think we were a little bit lower than that from the bulk of it, but 300 to 400 is kind of where the bulk of the, and again, that could be new builds, a lot there. Month supply, it shows it per, but that's, I just like to look at the average month supply. Average price, again, let's go to the median price. Oh, and this, we're specifically talking about active listings. So listings that are on the market right now, not closed like we had earlier. These are active listings. Median price is $285. Again, that's starting off way higher than even 2021 and 2022 started off around the same. And then look at red, 21, woo, went all the way down. And then green was up there. So yeah, 2021, if you bought a house that year, you're doing pretty good right now. Usually real estate is a buy and hold, give it a decade till you have good equity in the house. But yeah, if you bought a couple years ago, this shows you exactly 2021, still some reasonable pricing. And then, wow, 2022, the prices skyrocketed, and 2023, holy cow, 285 for listings. Active listings just keeps getting more and more expensive here and everywhere. But hey, the way I always look at it, we're not the big city. Average, let's go to median days on market. This is for the active listings. 25 days on market. So, okay, well, I'm going to pop over to Sedgwick for a second, because usually it's the first many pages that are kind of fun to look at. So let's check this out. Sedgwick. So this is the bulk of, so 515, home sales that closed in January were only 388. I had 3 of those. So, and then let's see, yeah, the other stuff is a bit similar. We got the 0.5 to 1.2 months supply. New listings, kind of about the same. Contracts written are down. Makes sense. People kind of stopped looking. Although January, they did start looking again. Maybe they just didn't, maybe they were looking, maybe they didn't write contracts, but that number's going to go up pretty good, even though we're still hovering at some higher interest rates. Pending contracts are down 834 to 655. That just tells us again, interest rates, I think, just really affected us this year. So median price went from, and this is what you're hearing probably across the board, with all the national news, that things are going down. And I had a conversation with someone that had bought a house, sight unseen, actually just got into it, but we saw it through the whole process. And my thing was, here's the thing is, we're in Wichita, we're not the big city. I still expect the sale price to just go right back up, even though January, yes, that didn't surprise me. Again, I got many deals for my buyers in November, December. But again, with the low listings and interest rates are now stabilizing. So it's not really expected to go back up to the 7s or over 7. It's like we're on the last, even though it's extended, it sounds like the inflation, and that they're not quite bringing down the rates quite yet. And we heard it's going to be more of the end of the year. I think it's extending a little. I think we're kind of hopeful that it'd be a little bit lower than now, and where it's still kind of hovering. As last week, interest rates went up, but so sale price, yeah, went down for January. So great, it went down for January. I would be surprised if it stays that way for February. We'll see. Days on market, of course, again, that's, like with everything else, people stop looking. And so the days on market increased significantly. Still, the perfect houses go quickly. And let's go to get closed. Yeah, really, it's the sale price. I just want to show you that it's about $5K higher than the entire MLS. That's, I think, the difference between what we looked at, the entire MLS versus this being Sedgwick County only. Near downtown, all the downtown area, all the new builds and stuff like that, not the far away counties. So that's kind of the highlights I think I wanted to say. So close listings 388. I think I'm just kind of going over the same stuff. Okay. So that's kind of what I wanted to cover today, just the difference. So that's kind of what I wanted to cover today, is talk a little bit about, the interest rates, how the interest rates have affected us, the difference between the entire MLS versus just Sedgwick County. Yes, we are down, like they've said, prices being down. I don't anticipate that continuing because, again, I'm out on the streets, tons of buyers right now. I mean, obviously, some of them still need to find that perfect house for them. Today I showed a house. There was already an offer on it. They hadn't quite got to a negotiated standpoint. Again, I'm waiting for an offer to hear if my buyers got it. It's getting later in the day. I'm not quite sure that's a good sign. But yeah, everything's down, just like the regular, what we're hearing in the rest of the, but from the standpoint for Wichita, for the duration of the year, we just don't have enough houses on the market. We're still in a decent price point. We're very affordable here, even though appreciation's hit here. We're higher. We're over the 200K, except for this month, as we saw. So anyway, hopefully that gives you a little idea of what's going on in January. I will be back talking about February market data. If you have any questions, specific questions on Wichita, give me a holler. We can go over everything. So thanks for watching and have a great day.